There are many financial institutions that customers can use to receive finance, get protection, and receive information. These institutions also have many ways of communicating with their customers. The different financial institutions are the Bank of England, banks, building societies, credit unions, national savings and investments, insurance companies, pension companies, pawnbrokers, and payday loan providers. The Bank of England is the central bank of the United Kingdom, where its features include controlling monetary policy, issuing banknotes, maintaining financial stability, and regulating other banks. The advantages of the Bank of England are that it controls inflation and ensures financial stability, while the disadvantages are that its decisions can increase borrowing costs and limit public spending. Banks are financial institutions where their features include accepting deposits, providing loans, offering overdrafts, and managing payments for individuals and businesses. The advantages of banks are that they provide convenient access to financial services and secure storage for money, while the disadvantages are that they can charge high interest rates and fees. Building societies are mutual financial organizations where their features include being owned by members, offering savings accounts, and providing mortgages. The advantages of building societies are that they often offer better interest rates and a more personal service, while the disadvantages are that they have fewer branches and limited product ranges compared to banks. Credit unions are non-profit financial cooperatives where their features include being owned by members, providing savings accounts, and offering affordable loans. The advantages of credit unions are that they charge lower interest rates and support local communities, while the disadvantages are that they offer limited services and may have membership restrictions. National Savings and Investments is a government-backed organization where its features include offering savings products such as premium bonds and ensuring that all funds are fully guaranteed by the Treasury. The advantages of National Savings and Investments are that it provides a secure place to save and does not charge fees, while the disadvantages are that interest rates can be lower than those of other providers and product choice is limited. Insurance companies are financial institutions where their features include providing policies that protect against financial loss from events such as accidents, theft, or illness. The advantages of insurance companies are that they offer financial security and peace of mind, while the disadvantages are that premiums can be expensive and claims may be refused. Pension companies are organizations where their features include managing retirement funds and investing contributions to provide income in later life. The advantages of pension companies are that they help individuals save for retirement and offer tax benefits, while the disadvantages are that investments can lose value and funds are not easily accessible. Pawnbrokers are businesses where their features include lending money in exchange for valuable items that serve as collateral until the loan is repaid. The advantages of pawnbrokers are that they provide quick access to cash without credit checks, while the disadvantages are that interest rates can be high and items may be lost if loans are not repaid. Payday loans are short-term loans where their features include lending small amounts of money at very high interest rates to be repaid on the borrower's next payday. The advantages of payday loans are that they offer fast access to funds in emergencies, while the disadvantages are that they carry extremely high costs and can lead to debt cycles. The methods of communicating with customers are branch banking, online banking, telephone banking, mobile banking, and postal banking. Branch banking is when customers visit a physical location to carry out transactions and receive personal assistance, and its advantages are face-to-face support and secure cash handling, while its disadvantages are limited opening hours and the inconvenience of travel. Online banking is when customers manage their accounts through a secure website, and its advantages are 24-hour access and convenience, while its disadvantages are the risk of fraud and the need for internet access. Telephone banking is when customers contact their bank by phone to manage their accounts or seek advice, and its advantages are personal communication and convenience, while its disadvantages are long waiting times and security concerns. Mobile banking is when customers use a smartphone app to check balances, transfer money, or make payments, and its advantages are speed and accessibility, while its disadvantages are potential technical issues and security risks. Postal banking is when customers send and receive financial documents or make payments through the post, and its advantages are accessibility for those without digital devices and a written record of communication, while its disadvantages are slow processing times and the risk of lost mail. The different types of consumer protection for personal finance are the Financial Conduct Authority, the Financial Ombudsman Service, the Financial Services Compensation Scheme, and consumer credit legislation. The Financial Conduct Authority is an independent organization where its function is to regulate financial firms, its role is to protect consumers and ensure market integrity, and its responsibility is to enforce rules and take action against misconduct. The Financial Ombudsman Service is an independent body where its function is to resolve disputes between consumers and financial institutions, its role is to provide fair and impartial decisions, and its responsibility is to offer free and accessible complaint handling. The Financial Services Compensation Scheme is a government-backed scheme where its function is to protect consumers if financial firms fail, its role is to compensate individuals for lost savings or investments, and its responsibility is to maintain public confidence in the financial system. Consumer credit legislation is a set of laws where its function is to regulate how credit is offered, its role is to ensure that borrowers are treated fairly, and its responsibility is to prevent exploitation through clear contracts and responsible lending practices. The different sources of advice for personal finance are citizens' advice, independent financial advisors, price comparison websites, debt counselors, individual voluntary arrangements, and bankruptcy. The functions, role, and responsibilities of citizens' advice are to provide free and confidential guidance, to help individuals understand their financial rights, and to support people in managing money or resolving debt issues. The advantages of citizens' advice are that it offers impartial and free advice to everyone, while the disadvantages are that it can have long waiting times and may not provide specialist financial planning. The functions, roles, and responsibilities of independent financial advisors are to give professional and personalized financial advice, to guide clients on investments, pensions, and savings, and to act in the client's best interest under regulatory standards. The advantages of independent financial advisors are that they provide expert and tailored advice, while the disadvantages are that their services can be expensive and quality may vary. The functions, role, and responsibilities of price comparison websites are to collect and display financial products from multiple providers, to help consumers compare prices and features, and to ensure information is clear and accurate. The advantages of price comparison websites are that they save time and make it easier to find competitive deals, while the disadvantages are that not all providers are listed and data may be biased towards paying companies. The functions, role, and responsibilities of debt counselors are to help people manage debt, to create realistic repayment plans, and to provide emotional and financial support during repayment. The advantages of debt counselors are that they offer structured guidance and can reduce stress, while the disadvantages are that some charge fees and success depends on client cooperation. The functions, role, and responsibilities of individual voluntary arrangements are to provide a formal agreement between a debtor and creditors, to allow repayment of debts over time, and to prevent legal action while the agreement is active. The advantages of individual voluntary arrangements are that they stop creditor harassment and write off some debts, while the disadvantages are that they affect credit ratings and require strict adherence to payment terms. The functions, role, and responsibilities of bankruptcy are to provide legal relief for individuals unable to repay debts, to liquidate assets for creditor repayment, and to offer a financial fresh start after insolvency. The advantages of bankruptcy are that it clears most debts and allows a new beginning, while the disadvantages are that it damages credit history, may result in loss of assets, and can restrict future borrowing. Thank you for watching this video on exploring the personal finance sector. I'll see you in the next one.